Assalamualaikum. So today we start our session with writing Surah Al-Fatiha. Alright, for this session we are going to learn about basis period and change of accounting date. What we're going to cover under this topic, you would learn about definition of basis period and regards to the respective year of assessment. And we will look at later on the different basis period for different category of taxpayer. And subsequently, we will actually look at how to determine the basis period when the company starts to commence their business. And later on, after a few years of operation, if they change of accounting date, and how would the determination of basis period would be done with regard to the those who have normally business income. Alright, as an introduction, we will actually look at go back to the section 3 scope of charge. Okay, and the scope of charge, we actually emphasize on 5 concepts. Okay, the first concept is actually talking about a person. Okay, a person is actually referred to the taxpayer. So in general, we emphasize on 2 categories of taxpayer. One is individual taxpayer and second category is corporate taxpayer. And then subsequently, we also look at the basis period. Okay, basis period is actually always associated with year of assessment. Okay, because we want to know for respective year of assessment, for each income or for each type of income, for instance, employment income, we would like to know that employment income is actually in respect of which particular period. Okay, it's covered from what date to a particular date. So that is what it means by basis period, which further will be explained subsequently later. And then under section 3 also mentioned about types of income. Okay, you should remember your section 4 backdrop, where you have business income, employment income, dividend, discount and interest. And then you will also have royalty and rental for section 4D. And then section 4E normally refer to periodical payments and section 4F refer to other types of income. Okay, and also please not to forget also section 4 capital A, special classes of income. Okay, and then we also have, we're also talking about derivation. Okay, so derivation of income, because we want to know apart from in which particular period that it will be taxed, we also want to know whether the source of income is actually Malaysian source of income or is it foreign source of income, because as you all know, Malaysian source of income will be taxed in Malaysia. Of course, foreign source of income will be exempted. And definitely for that reason, we need to know the scope of chargeability where definition of Malaysia is actually being given. Okay, it will define what is Malaysia, and in that will define the scope of chargeability. Okay, so from these 5 concepts, today we are going to look at on basis period. Okay, what is the definition of basis period? Basis period is actually referred to time frame in order to ascertain the income or the source of income. So for instance, like employment income, okay, we know that every month you receive your employment income. So we want to know, for instance, for year of assessment 2019, for which period the employment income will be taxed, okay, from what date to a particular date. And for your information, starting 1st January 2000, Malaysian taxation system has already moved into current year of assessment, okay, because prior to that we are actually using prior year basis. Okay, so there is a different or change in the policy or regulation. Okay, so to make it easier, now we move on to current year of assessment. Okay, what does it mean by current year of assessment? Okay, for this basis period is actually governed by section 20, 21 and 21 capital A. So under section 20, it does mention that basis period is actually referred to calendar year coinciding with a year of assessment shall constitute the basis year for that year of assessment. Okay, what does it mean? It means that, okay, you must be familiar with the terms that we are going to use throughout this particular topic. Okay, we are always talking about basis period. We're always talking about year of assessment. and which year we are talking about, calendar year, because this actually depends on the category of taxpayer. So for instance, in this example, for the year of assessment, the basis period for year of assessment 2019 would actually refer to calendar year 2019. What does it mean by calendar year? Okay, we know that calendar always start with 1st January and end until 31st December. So if we are talking about calendar year 2019, meaning it would actually refer to 1st January 2019 up until 31st December 2019. Okay, we also need to be familiar with the category of the taxpayer. Okay, what are the specific basis period for different category of the taxpayer? Okay, in the earlier slide I did mention we are focusing on two main category of the taxpayer. We are referring to the individual taxpayer and also we are referring to corporate taxpayer. Okay, so individual taxpayer, which is actually an individual who might have business income. Okay, who might have business income. So normally, when talking about the business structure, you should recall that we have three categories of business structure, which is first one is the sole proprietor, second one is partnership, and then the third one is company. Okay, so if you recall to the definition of each category of business structure, if you can recall that sole proprietor and partnership would have unlimited liability. Okay, what is the implication? When we're talking about tax, tax is actually liability of a particular person to pay, okay, to the income tax office. So that is actually the liability of the business owner. So in this case, for the sole proprietor and partnership, the liability to pay tax is actually goes back to the owner of the company or the owner of the business, which is an individual per se. Okay, so that's why for sole proprietor and partnership, it will be assessed on individual basis. Okay, what's the difference with the corporate taxpayer? Okay, corporate taxpayer is actually referred to company. So if you recall when you learn corporate law, okay, company law, when you set up a company, company is actually an entity. It's a separate entity from the owner. So let's say when you take up a loan, okay, if you default the loan, who is actually liable to pay the loan? All right, so of course now it will goes back to the company, because company is actually an entity who have the ownership, who have the responsible or the liability to hold that to be liable for that liability, to settle that liability. Of course, directors represent the company. Okay. However, if there is a change of the director, at the end of the day, who is actually liable to pay the loan, or if you have any, if the company have any loan, definitely it will goes back to the company itself. All right. So those are the difference between limited liability and unlimited liability. So due to that basis, that's why it does reflect, okay, with regard to the tax liability. So going back to this particular information, category of the taxpayer and basis period. So for individual who have business income, which is normally when they have sole proprietor or an enterprise, okay, or if they have partnership, therefore whatever income that they, whatever business income that they receive from the enterprise or sole proprietor business or from the partnership will be assessed on individual basis, which later you would see in the next week when we learn about business income and business expenses. It will be reflected in the computation. Okay, so you'll be able to see the difference. Okay, for now, you just need to know, be familiar with the basis period. Okay, so basis period for the for the individual with business income would actually follow calendar year. So meaning during that calendar year from 1st January up until 31st December, if that individual receive business income, okay, and also other sources of income such as employment income, rental income, dividend income, or any other types of investment income, it will be assessed simultaneous in that particular calendar year. However, for corporate taxpayer, okay, so corporate taxpayer we actually refer to company, right? So for the company, basically we will follow financial year. So what does it mean by financial year? Okay, financial year normally you would refer to the sets of accounts. Okay, sets of account meaning that if you're talking about financial year end 30th June, so what would be the sets of account for financial year end 30th June? Definitely it will start from 1st July, for instance, 2019, and then close the account on 30th June 2020. Okay, so that is actually referred to the financial year. So for the company, it will based on the financial year. So during the financial year, if they receive business income and any other sources of income, all those income will be taxed in financial year. So definitely for the corporate taxpayer, they would have business income, and they will also could possibly have a dividend income or interest income, rental income or rental income, but definitely they would not have employment income. Okay.